This is Boss Man from Swing Trade Snipers, and I'm back again with another video to help you improve your trading. Today in this video, we would like to talk to you guys about why we trade options as opposed to any of the other games that the stock market has offered us. You have what? Stocks, futures, Forex, crypto, all of these use the options. They all use the candlestick to move. So that means we can trade on any one of them, right? But what we wanted to teach you guys is why we do it with options. Because all of them you can make money. Some are, it depends on what game you're playing. As I said in my video that you can go watch where it breaks it down, what game are you choosing? The stock, it's only one game, that's the candlestick. But then they made sub games. The sub games are the stocks, the options, these games, because they want you to learn these games. So that's how you make your monies, and that's what we're doing. So you can choose one that goes fast, like options, or crypto. You can choose one that goes slow, like stocks. Depending your risk reward is better. Whatever you like, it's your flavor. But at any rate, we do options. The reason why we do options is because with options, you can go slow, you can go fast. Okay? What I mean by that, you can go long term, and that's slow. That's like holding the stock, if you know what you're doing. Once again, all of this information is once you learn the candlestick, not just jumping out there. Please, I want to stress that. We're not just jumping out the gym. We're taking our time and learning the candlestick, and then once you learn that candlestick, it works on all of them. So this is why I'm making this video, because I'm just showing you guys to improve your trading, that if you don't do options, you might want to by what I'm getting ready to show you guys. And like I say, with all of the other industries, all the other games, you have to buy whatever stock or whatever. If you're trading Apple, you got to buy Apple at 150, okay? And buy one share for that 150. In crypto, whatever that large number is, you got to buy it. That's one. You know what I mean? And futures, you have to buy them by the contract. So they charge $500, I think, for the contract. You might can get it a little bit less with some special things, but the bottom line is, I've always heard 500 or more you have to pay for the future contracts. With options, you can pay as little as $10. And as per these examples I'm getting ready to show you, 10 cents can take you to the moon if you know what you're doing. So right here is an option chart, okay? You can get contracts for all the way up to December the 25th, okay? December the 19th, 2025. So if you feel like that, the stock is, you feel like you can predict the future, you can go and buy something there, and your money will run from today. It'll go up, 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 up. If we're gonna keep going up, and you'll be, you'll get profitable, very good profits if you're right. Now, if you're wrong, you can lose all your money. I've lost my money doing it, okay? Now, you can get a contract for, we're on demand, y'all. This is where you can mimic the market and, do it as if you were trading in the market. We're on April the 24th right here. All right, at 9:49 in the morning, okay? This is the option contract as of right now. So for today, we have these contracts. Now, even if you don't know, it's real simple on the option contract. You already know the strike price, we use the open interest and the volume. Open interest is how many people is interested. Volume is how many people have bought it, okay? And you see it's thousands and thousands and thousands of people, okay? So the reason why we choose this is because look at this contract right here. You can go all the way up to, I'm gonna expand this. You can go all the way up to $82 for a contract. Now in options, don't just look at this number. You got to times this number times 100, okay? And it's weird how they make this. They do all this to throw you off so that you won't get it. You know what I mean? But it makes no sense of why you just didn't put the number there, how much it's worth, okay? But like for instance, down here, 77 cents, okay? That's times 100, that's $77. So just look at it like that. When you look at it, $37, $14. Just look at it like that, okay? Now, but my point is, you want to get, we can get contracts as high as 82, okay? Or we can get them as low as a penny. And if you don't believe me, look right here, a penny. 14,325 people are interested in this penny contract for whatever reason they got, okay? Because the contract, as long as the stock is moving right here, see the numbers moving? The numbers move. It's kind of like the matrix, right? So if this start going up, and this is the call side, and this is the put side, meaning this is the calls mean go up, puts mean go down. So if we were going up, you would see these contracts going up, okay? And what I did was I put I made a chart over here. I put one of these contracts over here in the chart so y'all can see how they move, okay? This contract right here, I'm gonna expand this. This contract right here, let me get rid of this line. I hate this line. Okay. This contract right here, right, y'all? The low of this contract was 8 cents. Y'all see that? 8 cents. But just, that was on the, what's this date? The 21st. This was April the 21st. But look back here, y'all. This contract used to be $2.53. Now we got to times it times 100. Do you get what I'm saying? You got to times that times 100. Okay? So this right here would have went all the way up, back to $2.53. All right. If you, now that's $253 you would have made from $8. How much percentage is that, y'all? This is why we choose options. If you, once we learn and we teach you guys how to find these contracts, because remember, we get paid going up or down. So right here, if we would have brought this right here and we knew this stock was going to go down, you could have brought it here and then brought it back here at 8 cents and made your money. Y'all see that? This is why we love options. And guess what? At 8 cents, $8, how many can you afford now? You can get 100 of them like it ain't no problem. Now, that 100 is times $253 now. Think about that, y'all. Think about that. You buy $8 and you buy 100 of them, right? So you pay $800, okay? You pay $800, and let's say it went back up to the 253. So let's do the math on that. 253 times 100. That's $25,000 you would have made from $800. If I'm wrong, check me. But this is what we wanted to show you guys. Like in this contract right here, same difference. This used to be $6.44. The stock came down. It came down to $1.87. But they fluctuate so fast. Now, here's the other trick. If you can, that's on a contract for, say, that day. Now, I know you're not going to go all the way back up there on that day. I get it. But my point is, that's how fast that one would have moved. Now, if you go down to, say, one of these down here, where it's farther out, it's not going to move that fast. So you have to learn your speed of what you're trying to do, because the further out you go, the contract is going to move slow, because like I said, the contract has to get there. Like this one is, say, this is June 2nd, 2023. All right. This one is next year, March 2024. So you got a bunch of contracts in here, the same way you got them up there. People are interested in them. Okay. You got interest. 153 people are interested in this one. This one is $86. That's in the money. Look, this one is $119 times 100, y'all. Are y'all serious? These are some serious numbers. But guess what? You can go from the high, right? Or you can come down here to the low. 99 cents. $99. Okay? And guess what? If you write, that $99 will grow like I showed y'all on the chart. It'll go up like crazy. So that's why we choose options. You have so much flexibility. If you want to get in a trade, let's say you get one of these contracts, right? Like we do. You get a contract around here like $1, and you buy a bunch of them. You can sell a little bit, keep a little bit. Sell a little bit, keep a little bit. Sell it all. Whatever you want to do. And guess what? You only got to get back in. Now the contracts cost money. They charge you, I think, like 75 cents or whatever. But the money you'll be making, you're not worrying about that at all, okay? So we got to learn this. Now, here's another trick that options do that we love. You see this number right here? It says 15 and 38. Now, in that gap right there, if you good and you get this 15-cent contract, $15 contract, and you know that it's going to go up, this bump right here, oh my God, you get a, because now you can afford them right here at 15 cents, but you'll get a area in the stock where it'll jump, and now it'll jump straight up to 38. Okay. And you see 60,000 people are interested in that. Y'all see that? And only 14,000 are interested in the 37 one, because they know how that game works. You get that bump. You can't do that with futures. You can't do that with crypto and all that. None of them. Only options. You flexible with options. You can wiggle as much as you want. There's nothing they can do about it. This is the game. These are people that writing contracts. Me and you. People are writing these contracts. Millions and millions and millions of people are writing these contracts. So get into this, y'all. Start thinking about trading options, because to me, it's the best. It pays real fast if you want it to pay real fast. It pays real slow if you want it to pay slow. That's like all of them together, if you ask me. So, check it out, and, we'll see y'all in the next video, because we're going to have more on these type of, situations. So this is Boss Man from Swing Trade Snipers, and I'm saying, I'll holler at y'all in the next video.